The U.S. housing market has seen significant fluctuations over the past few decades. From the housing bubble of the early 2000s to the crash in 2008 and the subsequent recovery, the market has been anything but stable. Ever wondered which U.S. cities are seeing their housing markets cool off the fastest? Whether you're a homeowner, investor, or just curious about real estate trends, this episode is for you. Stick around as we count down the top 10 U.S. cities with declining housing markets. You might be surprised by some of the names on this list. From the tech hubs of California to the bustling streets of Las Vegas, we'll uncover why these markets are cooling and what it means for you. Understanding these trends is crucial whether you're looking to buy, sell, or invest in real estate. So grab a cup of coffee, sit back, and let's get started. Before we dive into the specifics, let's talk about why understanding housing market trends is so important. For you as an investor, a declining housing market can signal opportunities to buy properties at lower prices, potentially leading to significant gains when the market rebounds. For potential homeowners, knowing which markets are cooling can help you make informed decisions about where and when to buy a home. Declining markets can also impact local economies, affecting everything from job growth to school funding, which means you can better navigate these changes and make decisions that align with your financial goals just by staying informed. In recent years, we've seen a surge in home prices driven by low interest rates and high demand. However, with rising mortgage rates and economic uncertainty, many markets are starting to cool off. According to the National Association of Realtors, home sales in the U.S. declined by 1% in 2023, reaching an annual rate of 3.78 million, the lowest level in the past 3 decades. In May 2024, there were 1,751,702 homes for sale in the U.S., up 14.9% from the previous year. This increase in supply indicates that more homeowners are looking to sell, possibly due to financial pressures or the desire to capitalize on high home prices before they potentially decline. To better understand these trends, let's look at some key metrics. Price drops. A significant decrease in home prices can indicate a cooling market. For example, in May 2024, the median sale price in the U.S. was $438,601, up 4.9% from the previous year, but this growth rate is slowing. Supply. An increase in the number of homes for sale can signal a shift from a seller's market to a buyer's market. The 14.9% increase in homes for sale in May 2024 is a clear indicator of this shift. Pending sales. A decline in pending sales suggests reduced buyer activity. In May 2024, 35.1% of homes in the U.S. sold above list price, down 2.3 percentage points from the previous year. Sale to list ratio. This ratio compares the sale price of a home to its list price. A lower ratio can indicate a cooling market. Speed of home sales. Longer listing times can signal reduced demand. Homes are staying on the market longer with an average of 34 days compared to 41 days last year. Now, before we dive into our top 10 cities, can you guess 3 cities that'll make the list? Drop them in the comments below. Let's see how many you can guess correctly. Now, let's get to the most intriguing part of our countdown, the top 10 cities with the most significant declines in their housing markets. From tech hubs to sunny retreats, these cities are seeing some surprising changes. Ready to find out which cities made the list? All right, let's jump in. Seattle's housing market has been one of the hottest in the country for the past decade. The city's booming tech industry, with giants like Amazon and Microsoft, attracted a steady influx of high-income professionals. This demand drove home prices to new heights. For instance, in 2010, the median home price in Seattle was around $360,000. By 2020, this figure had more than doubled to approximately $760,000. However, recent data indicates that Seattle's housing market is cooling off. In May 2024, the median sale price of a home in Seattle was $885,000, up 5.9% from the previous year. While this might seem like a positive trend, it's important to note that the rate of price growth has slowed significantly compared to previous years. Additionally, the median sale price per square foot increased by only 4.7% to $597. One of the most telling signs of a cooling market is the decrease in the number of homes sold. In August 2022, about 34% fewer homes sold within 2 weeks compared to the previous year. This decline in buyer demand and competition is a clear indicator that the market is shifting. Next up on our list is Las Vegas, Nevada. Known for its vibrant nightlife, casinos, and entertainment, Las Vegas has been a hotspot for real estate investors and home buyers. But how has its housing market evolved over the years? During this pandemic era, Las Vegas saw a surge in home prices as people sought more space and lower living costs compared to other major cities. By 2020, the median home price had risen to approximately $320,000. In May 2024, the median sale price of a home in Las Vegas was $440,000, up 7.3% from the previous year. While this might seem like a positive trend, it's important to note that the rate of price growth has slowed significantly compared to previous years. At the same rate, there were 1,006 homes sold, down from 1,043 the previous year. Homes are also staying on the market longer, with an average of 34 days compared to 41 days last year. At number 3, we have San Jose, California. As the heart of Silicon Valley, San Jose has been a major hub for tech companies and high-income professionals. San Jose saw a surge in home prices as remote work became more prevalent and people sought larger living spaces. By 2020, the median home price had risen to approximately $1.2 million. In May 2024, the median sale price of a home in San Jose was $1.5 million, up 14.9% from the previous year. Additionally, the median sale price per square foot increased by only 8.2% to $902. While this might seem like a positive trend, it's important to note that the rate of price growth has slowed significantly compared to previous years. San Diego's housing market has been highly competitive, driven by its desirable location and strong job market. In 2010, the median home price in San Diego was around $400,000. By 2020, this figure had risen to approximately $700,000. In May 2024, there were 919 homes sold, down from 928 the previous year. Several factors are contributing to the cooling of San Diego's housing market. Rising mortgage rates. Higher mortgage rates have made it more expensive to finance a home, reducing affordability for many buyers. Economic uncertainty. Concerns about the broader economy, including inflation and potential recessions, have made buyers more cautious. Increased inventory. More homes are coming onto the market, giving buyers more options and reducing the urgency to purchase quickly. Next on our list is Sacramento, California. Known for its rich history, vibrant culture, and proximity to both the mountains and the coast, Sacramento has been a popular destination for home buyers. In 2020, the median home price in Sacramento hit $420,000, a 14% increase from the previous year. The market was incredibly competitive, with homes selling within days, often above asking price. Fast forward to now, and we see a different picture. As of mid-2023, the median home price has dropped to around $400,000. Sales have increased by approximately 19%, and the number of listings has increased by 25%, indicating a shift towards a buyer's market. Homes are staying on the market longer, with the average days on market rising from 10 to 30 days over the past year. Coming in at number 6 is Denver, which has also seen a notable decline in its housing market. Historically, Denver has been one of the fastest growing housing markets in the U.S., driven by a booming tech sector and the influx of new residents. In 2021, the median home price in Denver soared to $560,000, with homes selling within hours of listing, often well above the asking price. However, the tide is turning. By mid-2023, the median home price has dropped to approximately $545,000. Sales have decreased by 22%, and inventory levels have risen by 30%, indicating a cooling market. The average days on market have increased from 8 to 28 days over the past year. Now, known for its rapid growth and relatively affordable prices compared to other major cities, Phoenix experienced a housing boom during the pandemic. In 2021, the median home price in Phoenix was $425,000, a 25% increase from the previous year. Homes were flying off the market, often with multiple offers. Today, the median home price in Phoenix has dropped to about $410,000. Sales have declined by 18%, and the number of homes on the market has increased by 28%. The average days on market have risen from 12 to 35 days over the past year. Oakland's housing market has been highly competitive, driven by its desirable location and strong job market. By 2010, the median home price in Oakland was around $350,000. By 2020, this figure had risen to approximately $750,000. The city's affordability compared to San Francisco made it an attractive option for many buyers. In May 2024, there were 250 homes sold, down from 284 the previous year. Next up is Northport, Florida. Known for its warm climate, beautiful beaches, and growing community, Northport has been a popular destination for home buyers. During the pandemic, Northport saw a surge in home prices as people sought more space and lower living costs. By 2020, the median home price had risen to approximately $300,000. Recently, however, the market has started to cool. The median home price has dropped to around $340,000, reflecting a 3.2% decrease. Home sales have fallen by 15%, and the number of homes on the market has increased by 18%. The average days on the market have risen from 14 to 35 days over the past year. Tacoma, Washington has been a popular alternative to the pricier Seattle market. In 2019, the median home price in Tacoma was $375,000, and homes were selling quickly due to strong demand from buyers seeking more affordable options within commuting distance to Seattle. As of mid-2023, the median home price in Tacoma has decreased to around $365,000, a 2.5% drop. Home sales have declined by 10%, and the number of homes on the market has increased by 20%. The average days on market have risen from 12 to 32 days over the past year. Well, as we wrap up our countdown of the top 10 U.S. cities with declining housing markets, let's take a look at the broader picture. So, what does the future might hold for the housing market in general? Well, experts predict that the market will continue to cool as long as interest rates remain high and economic uncertainties persist. However, this could also mean opportunities for buyers and investors to find deals as prices adjust. Whether you're buying, selling, or investing, staying informed is key. Keep an eye on those important metrics and be ready to adapt to changing conditions. Let's hear from you. What are your thoughts on the future of the housing market? Do you think prices will continue to stabilize, or are we in for more significant changes? Drop a comment down below and share your predictions. Also, if you found this episode valuable, please don't forget to hit that subscribe button. Speaking of market trends, have you heard about the potential collapse in the commercial real estate sector? Warren Buffett has some interesting thoughts on this topic, and you don't want to miss it. Check out our episode titled Warren Buffett's Thoughts on the Impending Commercial Real Estate Collapse to learn more about the Oracle of Omaha and what he has to say about the future of commercial real estate. Click the link in the description below to watch now.